What if I told you that $5,000 could be the single turning point in your financial life? Not millions, not a six-figure salary, just $5,000, less than the price of a used car or a 2-week vacation, has the power to unlock a future where your money works for you, not the other way around. Yet every day, people waste this opportunity on impulse purchases, lifestyle upgrades, or letting it sit idle in a savings account, earning next to nothing. The truth is, most people don't fail because they don't have enough money. They fail because they don't know what to do with the money they do have. And if you've ever found yourself wondering, where should I put my extra cash? Or how can I make this money actually grow? Then this could be the most important message you hear all year. Because today, we're not just going to talk about saving or spending. We're going to break down exactly how to invest your $5,000 in a way that builds wealth, creates freedom, and sets your future self up to thank you, not hate you. Whether you're dreaming of early retirement, starting your own business, or finally taking control of your finances, this is your blueprint. But there's a catch. If you ignore this now, the next time you look back, that $5,000 will be gone, and so will the life it could have built. So if you're ready to stop making excuses, start building real wealth, and make one of the smartest financial decisions of your life, keep reading. Because this isn't just advice, this is your wake-up call. Welcome to Wealth Echelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button, and don't forget to turn on the bell for updates on all our latest content. The beauty of ETFs lies in their simplicity and effectiveness. Unlike buying individual stocks, which requires deep research, constant monitoring, and the ability to stomach significant volatility, ETFs offer a much smoother and safer ride. They are inherently diversified, meaning your $5,000 isn't riding on the success or failure of a single company. Instead, it's spread across many companies, industries, and even countries if you choose globally diversified ETFs. This reduces your risk while still giving you solid exposure to market growth. Take VOO, for example. With one investment, you gain partial ownership in industry giants like Apple, Microsoft, Amazon, and hundreds more. These are companies that dominate the global economy and have a proven track record of performance, innovation, and resilience. Historically, the S&P 500 has returned approximately 10% per year over the long term. That means your $5,000 investment in VOO could potentially grow to over $10,000 in just 7 years if the market continues on its average trajectory. And you don't have to lift a finger. No day trading, no second guessing, no stress. Now consider VXUS, which gives you exposure to thousands of companies outside the US and Europe, Asia, and emerging markets. Why is this important? Because it adds a layer of diversification that protects you in case the US market underperforms. Global economies don't all rise and fall at the same time, and by having international exposure, your portfolio becomes more resilient. Think of it as not putting all your eggs in one national basket. But what if you're someone who prefers income over long-term growth? That's where SCHD and JEPI come in. SCHD, Schwab U.S. Dividend Equity ETF, is known for holding high-quality companies with a strong history of paying and growing dividends. Companies like Coca-Cola, Pepsi, Johnson & Johnson, and Verizon. The dividends you earn can be reinvested for compounding or used as supplemental income. JEPI, on the other hand, is a newer ETF that takes a slightly different approach by combining equity investments with a covered call strategy. The result? JEPI offers one of the highest yields among major ETFs, often 7 to 10% annually, which it distributes monthly. That's powerful for those seeking regular income, especially in retirement or semi-retirement. Even better, these ETFs are extremely low cost. Traditional mutual funds often charge fees upward of 1%, which eats away at your returns year after year. Most ETFs, including VOO, SCHD, and VXUS, Charge expense ratios as low as 0.03% to 0.06%. That means nearly every dollar you invest is working for you, not paying a fund manager's salary. Over the long run, that small difference in fees can translate to tens of thousands of dollars. And accessibility, it's never been easier. You don't need a financial advisor or a big brokerage account. Platforms like Fidelity, Vanguard, Charles Schwab, and even apps like Robinhood and M1 Finance let you buy fractional shares of ETFs with zero commission fees. That means you can start today, even if you don't want to commit the full $5,000 at once. Many investors opt for dollar-cost averaging, which involves investing small amounts regularly, weekly or monthly, to take advantage of market fluctuations and reduce the emotional stress of timing the market. In short, using your $5,000 to invest in ETFs is one of the most proven, beginner-friendly, and powerful wealth-building strategies available. It doesn't require advanced knowledge, high risk tolerance, or constant attention. It simply requires discipline, patience, and a long-term mindset. While others chase the next big stock or spend their windfall on things that depreciate, you'll be quietly building a financial future that compounds while you sleep. And remember, you're not just investing in companies. You're investing in the economy, in innovation, in productivity, and ultimately in yourself. Every dollar you put into an ETF today is a vote for your future freedom. However, not all investments have to go into the market. One of the most overlooked and highest yielding investments you can make is in yourself. Skill acquisition is often the difference between stagnation and massive income jumps. While the stock market might give you 7 to 10% returns per year, the right skill set can double or triple your income in a matter of months. Imagine using $1,000 to learn a high-demand skill like coding, copywriting, digital marketing, or data analytics. These fields are booming, and many of them don't require a formal degree, just proficiency and proof of your ability. Even better, many certifications and online courses can be completed in weeks, not years. Platforms like Coursera, Udemy, and Skillshare offer everything from beginner courses to professional-level training. Once mastered, these skills open the door to freelance work, promotions, or starting your own business. The ROI here isn't just financial, it's transformative. You gain control over your time, your income, and your professional destiny. For the entrepreneurial-minded, $5,000 might just be the seed capital that launches your own business. In the digital age, building a side hustle has never been more accessible or affordable. You don't need a storefront or inventory, just a laptop and an internet connection. Countless successful businesses have started with less than $5,000. You could start a print-on-demand store using platforms like Shopify and Printful, where you create and sell custom merchandise without ever handling the product. Or you might choose to launch a YouTube channel, investing in a decent microphone, a basic camera, and some editing software. With consistency and quality content, you can generate ad revenue, sponsorships, and affiliate income. Alternatively, if you have a specific service like whiteboard animation, writing, graphic design, or social media management, $5,000 can be used to build your brand. Purchase tools, build a website, and market your services. This kind of investment may feel riskier, but it's often the most rewarding. Not only can it generate recurring income, but it also teaches valuable lessons in sales, marketing, and business management that you can carry for life. Of course, not everyone wants to take big risks, and that's perfectly fine. Another smart approach is to build a strong financial foundation with your $5,000. Start by establishing an emergency fund, ideally in a high-yield savings account that earns interest. This gives you peace of mind and a cushion for unexpected expenses like car repairs or medical bills. Next, consider contributing to a Roth IRA, a retirement account where your investments grow tax-free and can be withdrawn tax-free in retirement. Even if you only invest $2,000 of your $5,000, that money could grow substantially over decades. If you're eligible, also look into opening a health savings account, HSA, which allows tax-free contributions and tax-free withdrawals for qualified medical expenses. These accounts are less exciting than investing in a hot stock or starting a YouTube channel, but they're essential. They give you both short-term protection and long-term wealth accumulation without the stress of market swings or business risk. In the end, what you choose to do with $5,000 might seem like a small decision in the grand scheme of things, but make no mistake, it can shape the entire trajectory of your financial future. It's easy to underestimate the power of that amount. After all, it's not a fortune. It's not enough to buy a house, retire early, or drastically change your lifestyle overnight. But what $5,000 can do, if used with purpose, is start a ripple effect that builds momentum year after year. It can be the down payment on your future wealth, the seed of your side hustle, the investment in a skill that completely transforms your earning power, or the foundation of an emergency fund that shields you from financial ruin when life throws the unexpected your way. Yet too many people let that opportunity slip through their fingers. They tell themselves, it's not enough to matter, and spend it on a new phone, clothes, or a weekend getaway. The money is gone in a flash, and so is the potential it carried. No growth, no return, no progress, just short-term pleasure that quickly fades, replaced by the same financial stress, the same paycheck-to-paycheck routine, and the same regret that they didn't do something smarter. But you're not most people. You're reading this because a part of you knows that money should work for you, not be wasted. That $5,000 is more than just cash. It's a window of opportunity. When you invest it into ETFs, into your education, into a business idea, or even just into financial protection like a Roth IRA or an emergency fund, you're building a future that compounds. You're turning one smart decision into many more. You're giving your future self options, freedom, peace of mind. The secret isn't in finding the perfect investment. It's in making a deliberate, informed move now instead of waiting for the right time that never comes. Because regret doesn't just come from making the wrong choice. It often comes from making no choice at all, from hesitating while others take action, from watching opportunities pass you by while you stay stuck, paralyzed by indecision. So 5 years from now, when you look back, how will you feel? Will you be proud that you used that $5,000 to build a stronger, more secure, and more independent life? Or will you be haunted by the question, what if I had just done something smarter with that money? You're holding the steering wheel right now, and this small, seemingly simple decision, what to do with your $5,000, could be the quiet but powerful beginning of your financial transformation. The difference between a future of what-ifs and a future of, I'm so glad I started back then. The choice is entirely yours. But make no mistake, what you decide today could define everything that comes next. Thank you for watching Wealth Echelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.